everyone. Welcome to 30 Minutes of Business. And that happens on Business Morning on Sunrise Daily. I'm Ini John Mekpa. And now let's do business, starting with the Naira. NAFEX appreciated, well, unlike the previous trading session, to fix right here at 1,500. That's for this 555 Naira 45 kobo. Well, I guess I should just mention in the budget, we see that the benchmark for the Naira is 1,400. But I guess the government does have a plan to settle it at 1,400 so that the calculations in the budget is more realistic. So we see that it was down 0.08%, while for NFEM, it was 0.31% down at 1,538 Naira 87 kobo. The previous day we did have intervention from the Central Bank of Nigeria, but not so for yesterday. Now I'm still staying around the CBN. The CBN has reported that diaspora remittances for international money transfer operators totaled $4.22 billion from January to October 2024. That's almost doubling the $2.62 billion recorded in the corresponding period in 2023. The governor of the Apex Bank, Mr. Layemi Cardoso, discloses during an interactive session with Senate Committee on Banking, Insurance and Other Financial Institutions. The increase in remittances represents a growth of approximately 61.1% in 1 year. Remember, some adjustments were done to IMTOs, and that we can credit to this increase being recorded. We're providing a monthly breakdown that also notes that remittances rose from $336.61 million in September 2024 to $402.38 million in October 2024. Now we go to the global oil space and see that oil prices fell in early trade on Thursday after the United States Federal Reserve signaled that it would slow the pace of interest rate cuts in 2025, and that potentially could affect fuel demand. So we do know that there was the expectation of a 25 basis point cut, and that happened. But guess what? That was already priced into the market. And so what investors are looking out for or using at this time is the future statement, and that's that there may not be a cut next year. And we've seen that reflecting in commodities. We see Brent went down 0.45%, $73.06 a barrel. WTI 0.51% in the red, $70.22 a barrel. The false reverse much of the gains of Wednesdays when price settled higher as U.S. crude stocks fell and the United States Federal Reserve cut interest rate, which happened and was announced. Well, we'll come to Nigeria now. Some good news for consumers of PMS, which seems to be, I think, everybody in the country, and it's coming from Dangote Refinery. Well, Dangote Petroleum Refinery has reduced the price of its premium motor spirit products to below 900 Naira per litre to provide the much-needed relief. This is how they say it, for Nigerians ahead of the holiday. And some people have called this as a Christmas hamper, Christmas presents coming from Dangote to consumers in Nigeria. Well, the refinery, which previously, remember, lowered price to 972 truckers per litre, that happened in November 24, has now announced the new price of 899 Naira 50 kobo per litre. And this reduction is, they say, is designed to ease transport costs during the festive period. So I'm sure we'll be looking out for how long it will take the stations, the retailers, to now translate this reduction in the price, whether we'll hear that there's old stock, so they're still selling from old stock. You know that story. But we'll see that. Dangote, thank you so much for this Christmas gift to PMS consumers in Nigeria, reducing the price to 899 Naira 50 kobo. And this was disclosed by the Group Chief Branding and Communications Officer of Dangote Group, Mr. Anthony Chejina. I said that the company has also introduced a special offer to further benefit consumers. In addition to the holiday discount, Dangote Petroleum Refinery is allowing consumers to purchase an additional litre of fuel on credit for every litre, but on a cash basis. So I think you will have to go to the stations to get that. But I mean, this is good news at a time like this. Now, economic think tank, that's the Center for the Promotion of Private Enterprises, has commended the presentation of the 49.7 trillion naira 2025 budget by President Bola Tinubu. In a statement released by the Chief Executive Officer, Dr. Muda Yusuf, the CPP says the priorities are laudable and appropriate for the prevailing economic and social conditions. However, the advisory firm says that the plan to commit 15 trillion naira to debt servicing is one of the major downside risks to the fiscal space for the next year. The CPP explains that there's urgent need to reduce the country's debt exposure as well as address the high cost of government borrowing locally and internationally. So we will stay on the budget issue in a moment. But first of all, let's have a conversation with the Group Managing Director of Capital Field Investments Group, Mr. Raphael Lewu, joins us virtually. Mr. Lewu, good morning.
Good morning.
Yeah, so we're going to go to the issues, around FX and, looking at the year and all of that. But I wonder, have you had any time to look at the budget? Do you have any thoughts on it? On the proposed budget?
I'm sorry, I didn't hear that well.
Can you hear me, Mr. Lewu?
Okay, I can hear you now. I didn't hear the question. Can you please take that again?
Okay, I was asking if you had time to look at the budget or you've had conversations around the budget that was presented by the president yesterday. If you could share your thoughts on it.
Yes. Well, thanks. For me, it's interesting considering the figures we're looking at. A lot of comments have come from different sources about how ambitious it is, but relatively, it's a drop from the over 30-something billion dollars that we got in 2023, or 2024, I beg your pardon, from the figure that we had then. But now, at over 40 trillion naira, if you look at the ingredients and the assumptions that will be given, exchange rate at 1,500, projection of 2 million barrels per day, and what I call it rather ambitious, oil price of $75. Implementation will tell us what we expect over the period. The allocations are different things to me. Is another thing for anyone to talk about. How much are we spending for security and defense? How much of these budgets do we have allocated for education and then capital expenditure? If you look at this comparatively in the past, do we have a departure from where we were before? Some will say to you, look, so much money is going to defense. What about areas like health, agriculture that will help boost food production during the period? My view will be the issue of prioritization during that period. I mean, are we doing enough to ensure that this will impact the people? Because the critical thing for us in Nigeria today, the inflation that we are facing, many people are talking about this. If the government is able to implement in a manner that will have the impact that the people will talk about, and then speaking to the reforms, that, to my mind, should be what we'll be looking at.
Right, sir, thank you so much for that. But away from that, let's go to the monetary side. Now, given that the Central Bank of Nigeria's recent policy shift, what role does financial innovation play in driving economic growth from your perspective?
Yeah, thank you. So financial innovation obviously will have direct impact with how economic growth will be. And one thing is clear about this is, as the economy evolves, financial innovation becomes inevitable. And so financial innovation will help to drive the various indicators we're looking at in the economy. Things like the innovation will help with financial instruments, technology, and payment systems. And so what you get to see will be that innovations will help to move things forward to impact the economy in positive ways, where the operators are there to come up with innovations in the area of technology, which also will control the way we pay for goods and services, investments, borrowings, and then relationship between the commercial enterprises in the ecosystem. That's what financial innovation will do in relation to what we have with the economy.
So a lot of Africans are not very happy with, the international, especially the Bretton Woods institutions, IMF recommendations. They believe they are they bring more harm to the economy than good, because of course they'll give requirements and conditions. But regarding fiscal consolidation and revenue generation, what are your thoughts on IMF's recommendations?
Yes, thanks. So in recent times, we've heard the IMF talk a lot about fiscal consolidation and revenue generation. And the recommendations hinge around those two very key areas. And for them, what this will do will impact for fiscal discipline and by way of consolidation. And then the benefits they believe that will help for us in the economy. Revenue mobilization is one of those. It will go to impact structural reforms, progressive taxation, social.
Hello, Mr. Leo.
I personally believe Can you hear me?
Yes, I can hear you, Mr. Leo. Please go ahead. Oh, it does seem like the network from Mr. Leo's end is fluctuating, unfortunately. I guess we would have to see if we can get him back.